Today, loans and building approvals up, but don't lift mortgage rates. Hello again, it's Martin North from Digital Finance Analytics, one latest post covering finance and property news with a distinctively Australian flavour. Well, the ABS says that the value of new housing loan commitments rose 1.7% to $32.4 billion in May 2022. That's seasonally adjusted. That's according to data from the ABS they released today. The ABS said that the rise in May followed a revised fall of 2.8% in April, when the proximity of Easter and Anzac Day public holidays reduced the processing of loan applications. Key lenders attributed the rise in May to a clearing of the processing backlogs. The value of new owner-occupied housing loan commitments rose 2.1%, contributing 82% of the rise in total lending. Investing loan commitments rose 0.9%. The value of new owner-occupied loan commitments rose across most states and territories, the largest being Victoria, up 6.1%, Queensland up 2.5%, and South Australia up 2.8%. Western Australia fell 3.3%, and the Northern Territory fell 7.3%. In May 2022, in original terms, the average loan sizes for owner-occupied dwellings, which includes construction and the purchase of new and existing dwellings, rose 0.7% at the national level from $611,000 to $615,000. Average loan sizes have in general continued to rise despite recent moderations in owner-occupied lender activity. This reflects a larger decline in the number of loan commitments relative to their value. It rose in Queensland, in Victoria, and in the ACT, and it fell in all the other states. The number of new loan commitments to owner-occupier first-home buyers rose 2.3% in May. That was 31.6% lower compared to the same time last year. But new loan commitments to owner-occupier first-home buyers remained 6.9% higher than in February 2020 levels prior to the pandemic stimulus. The number of loan commitments fell in Western Australia, down 2.4%, Queensland down 0.5%, and South Australia down 1.5%. The 0.9% rise in the value of new investor loan commitments was driven by New South Wales, up 3.1%, and Victoria, up 2.8%. The largest fall was in Queensland, down 4%, and that was 20.5% lower than its all-time high in March 2022, but remains 131.5% higher than in February 2022. And the value of new loan commitments for fixed-term personal finance rose 5.1% seasonally adjusted in May, driven by a 10.2% rise in lending for personal investment, as well as a 3.2% rise in lending for the purchase of road vehicles. Lending for travel rose 11.4%, though it remains 20.4% lower than pre-pandemic levels. And elsewhere, they also said that the total number of dwellings approved rose 9.9% in season-adjusted terms in May. That followed a 3.9% fall in April, according again to the ABS. The ABS said the increase in the total number of dwellings approved in May was driven by approvals for private sector dwellings excluding houses, which rose 32%. Approvals for private sector houses fell 2.7% in May, following a 0.2% fall in April. And across Australia, the number of dwelling approvals rose in Western Australia, up 38.7%, Tasmania up 26.8%, Queensland up 20.9%, and New South Wales up 4.7% in season-adjusted terms. Dwelling approvals decreased in South Australia, down 21.3%, and Victoria down 6.6%. Approvals for private sector houses fell in New South Wales, down 11.1%, South Australia down 4.1%, Queensland down 1.3%, and Victoria down 0.9%, while Western Australia rose 4.9% in season-adjusted terms. And the value of total buildings approved rose 9.9% in May, following a 5% fall in April. The value of total residential building increased by 5.6%, comprising of a 5.9% rise in the value of new residential building approved and a 3.8% increase in the value of alterations and additions. And the value of non-residential building approvals rose 16.5%, following a 6.8% decrease in April. The trend series for building approvals has been reviewed and has been reinstated, and the trend estimate for total dwellings approved fell 1.5% in May, following a 1.2% fall in April. Private sector houses approved fell 0.5%, while private sector dwellings excluding houses fell 2.5%. So that trend data is probably more reliable, given that we get very significant dynamic movements month on month, specifically in the approval sector relating to the construction of high-rise, not least because, of course, a single high-rise may contain many individual dwellings. And finally, ahead of the July Reserve Bank cash rate decision tomorrow, Canstar released new research that showed the majority of Australians are against or unsure about the rapid pace of rate rises. A new Canstar survey of 1,001 Australian home loan borrowers and savers showed less than 2/5, actually 39%, support the Reserve Bank's decision to lift interest rates as hard and as fast as it has in recent months, compared to 37% who feel interest rates should not be rising so rapidly, and a further 25% who are unsure. Now, of course, if you look at that in more detail, those with a mortgage are much more likely to vote against any further rate rises, whereas those without a mortgage are more inclined to support the rate rises, thinking perhaps more broadly of the economy, or perhaps more specifically thinking about returns on deposits. Not sure how useful that data is, but it just makes the point that different households are very much aligned differently to RBA strategy. So if we stand back and just think about those three sets of data, firstly, rates will rise. Tomorrow we'll see how much, and that's going to hit households further. Secondly, we know that the rate of growth of credit is easing back and probably will continue to fall, particularly in trend series terms, and that building approvals are still significantly down from where they were at their peaks and will probably continue to slide lower. These are all indicators of slowing economic activity and outcomes in my view, but I guess we'll know more after the RBA releases its statement tomorrow afternoon at 2:30. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.